Alrighty, guys, welcome to our daily webinar for Wednesday, June 3rd, halfway through the trading week. Want to look at some charts for you guys. It's been a pretty slow week starting off. So before we jump into things, let me just, provide some commentary for this week. So the only action we've had this week is taking profits on our CAD Jappy swing trade. So even though we have not placed a trade this week yet, we're still in some nice profits from a trade that carried over from last week, which is nice. And, if you really think about it, that trade we made 9% on, and I try to aim for 5% on average a month. So, of course, we want to capitalize on the months that are good. So I'm not necessarily saying that we aren't going to be doing any more trading this month. I think there's going to be definitely more opportunities to place trades before the end of the month. Lots of opportunities, but I'm just trying to put things into perspective. When we have a killer week, when we have a killer trade where we make 9%, it's okay if, of course, if there's an opportunity, we're jumping right back in, right? If there's another opportunity, we're going to get right back in. But this week, there's been a lot of news. Let's look at the economic calendar very quickly. So earlier today, we had a lot of central banks, heads of central banks that spoke. Now, we didn't really see as much volatility as I would have expected to see. We're going to also look at the charts in a moment, but there definitely was some volatility, and I'm glad we stayed on the sidelines. And funny enough, one of the pairs that I'm interested in still trading, which is pound yen, which we're going to look at in just a moment. Unfortunately, we have an interest rate decision for the pound in the morning. So in 9 hours, there's an interest rate decision for the pound. So I really am hesitant about hopping into a trade as good as it looks, as much as I want to sell pound yen. What we may do, guys, is we may look at placing a sell limit. So if price gets to our area, we'll sell it, but I'm not really interested in placing a trade at the moment. So if you guys want my analysis, stay on here. If you're really just looking for me to throw out a trade, unfortunately, right now, I don't really see anything. I know some webinars will give out a setup or a trade. I'm just letting you know straight up that there isn't going to be any setups, or I'm just going to be giving you guys my direction and looking at the markets. So dollar index, I've been mentioning expecting price to stay above 93. Well, as long as we stay above 93.2, that I am interested in buying the dollar. And yesterday, Monday, Sunday, this whole week, all last week, I've been bullish on the dollar, and I remain bullish on the dollar. And even though I remain bullish on the dollar and it is moving in our direction, right? We look at it on the 4-hour, it's not really moving a whole lot, but I'm still biased towards the upside. Gold, I said yesterday that I would expect downside on gold because I'm expecting more upside on the dollar, and that's just what we've seen. So recent 24 hours, we've seen gold drop from about $12.75, where it's right now about $12.67. So almost $10 per ounce it's dropped, and it's continuing to move towards our target of $12.50 that I've had as a target for quite some time. Euro USD, I mentioned yesterday, Monday, Sunday, I'm still bearish on Euro USD, and I'm as of today, I'm still bearish on Euro USD, but not a whole lot of movement. We're really consolidating around the lows right now. But there is definitely, we have to recognize that there is a lot of consolidation. There's a little bit of a bear flag, right? We have that descending channel, or I'm sorry, that dip, and then just the consolidation to create a little bit of a bear flag. So the ideal direction, and the direction that makes the most sense, is still down. Let's move over to USD Swiss franc. Same thing, USD Swiss franc, right? I've been expecting upside on USD Swiss franc because I'm bearish on Euro USD, and because I'm bullish on the dollar index, and because I'm bearish on gold. I'm bullish on, I'm whatever. I mean, you guys probably know this by now, but whatever I'm saying my bias is on gold and Euro USD, most likely it's the polar opposite on USD Swiss franc. So still looking for buys and upside on USD Swiss franc. Pound dollar, I mentioned this yesterday that I'm still biased towards downside. We really haven't seen a whole lot of movement. We actually haven't seen, I don't believe we've seen actually yesterday's lows broken. No, we have not seen yesterday's lows broken yet. So we're just really consolidating around the lows. But at the same time, we are not seeing a correction, right? We're just consolidating. So it's just one of those times where, this has been in a big downtrend. We definitely do not want to be selling, taking any position trades, selling at these lows. Pound yen. So pound yen, I am very interested in finding a continuation to short. Let me tell you though, the ideal area for pound yen for us to short is somewhere around this area. A couple reasons why. Main reason is that it's our former support. So this structure right here, this is our support of this structure. But also we can see that there's the 50 EMA right here. So a little bit of confluence. And I swear, guys, that before this webinar, I have not, I swear on my mom that I have not even looked at the Fibonacci levels, but I'm just eyeballing it and it looks like we're in between. Let me just hide this to get a good look. Looks like we're around the 38.2% retracement level. So let's take a look. Maybe even lower than that. Oh, my eyes do not deceive me. Did I call that or did I call that? I said 38.2, maybe a little bit lower than that. I swear, guys, I did not draw this before. It's just like you can start to eyeball these things. When you've done this for 4 or 5 years, it literally just, you're able to see these things. So we're getting close to the 38.2% retracement level, but check this out right here. Boom. You guys notice something? Not only is it the support structure, not only is it the 50 EMA, but what else do we have right there? We have the 50% retracement level. And for those of you guys that have, listened and followed along with my Fibonacci commentary throughout the months and years, you guys know that my favorite level, I respect all the levels on Fibonacci, but my favorite level is the 50% because that's half, right? It just makes sense. A lot of times it goes to halfway retrace and then we have a trend continuation. So let's go ahead. Actually, I take back what I said in the beginning about not giving a trade setup. We are going to actually give out a trade setup on this webinar. So right here is our support. And we're looking to resell pound yen somewhere around this area. So that's going to be, let's see where 15's at. So pretty much almost right in the, right exactly at the 50 EMA, which is 46.15. We could even, to make sure our trade gets hit and our entry gets hit, we could call it 146.1 or 146.10. And then we want to look at targets and stop losses. So when I look at this structure, right, this is what I'm looking at, and this is a good opportunity to teach you guys. Let me zoom in a little bit. And let me tell you guys, if you guys, I know that there's a lot of regulars that watch these webinars. If you guys get value, even if you learn just one little thing new on these webinars, I highly encourage you guys, if you can do me a favor and just, write inside the chat room, how valuable or how, much you're learning from them. Because I think a lot of people just write off. They don't see the value. And I know for a fact there's a large percentage of members that's never even watched a single live webinar, whether they think they're too good for it or they just are too lazy for it. Maybe someone else besides it coming out of the horse's mouth, someone else saying it maybe will help them listen. So at the end of the day though, if they don't want to, they don't want to. It's you guys are the ones, you guys watching this are the ones that are going to profit, the ones that are seriously going to succeed. So props to you guys, kudos to you guys. I really don't really care if there's just one person watching this. I still think even if one person gets value out of this, it's still worthwhile long run. So let's get back to this. So entry 146.10. As far as a stop loss, what I see, this is what I see. So of course we just recognized this structure, right, where we're selling at, and then we have our 50 EMA. As far as our next levels of resistance go, I see this trend line that's coming down right here, and I see, of course, 148. Now, from where we enter 146 to 148, that's a 200 pips. We aren't going to worry about anything above here. What I'm really looking at is basically trying to find a stop loss. Either this would be like the maximum stop loss above this trend line, and then our minimum stop loss would be like above, kind of just a little bit above this structure, right? Maybe even a little bit higher. So we have to figure out where between here and here are we going to set our stop loss? And the way I generally determine that is I look below our entry and I ask myself, where can the targets be? And based on where the most conservative target can be for our entry, I try to achieve a 1 to 2 risk to reward, or a 2.0 risk to reward or higher, based on the most conservative target, if that makes sense, if you guys are following along with what I mean. So now we also have to take into consideration the time frame that we are analyzing this pair in looking at taking this setup on, right? That we're setting this trade up on, and that's the 4 hour. So, and then you also have to recognize the pair that we're on. So we're looking at GJ, you know, pound yen. We know that the pips on pound yen move a lot faster than an average pair, right? So, you know, maybe up if we see Euro USD spike down, you know, or spike up 10 pips, you know, we go over and look at pound yen, the same move on pound yen, it's gone 30 or 40 pips. And so you guys know what I'm saying. So when I look at my target, right, we're on the 4 hour, I'm looking for longer term targets, right? Let me put in the other risk to reward short. Let's see, where is it? Is it this one? Yes, it is. Boom. So this one right here. So let's just go to our original target, 133.50. So let's set 143.50. And that makes sense, right? That's our previous lows of like the yearly lows, right? We're talking yearly lows. So it's the beginning of the year, all the way up here when the year opened, all the way in the 150s, right? Back in May, we made the lows. Now we're getting towards the end of June and we're looking at retesting those lows. So we look at our risk to reward ratio. So let me just rehide this again. Okay. And let's go in just a little bit and let's examine. So we have our target, we have our entry, and we have to find a stop loss. Now, let me just backtrack just for a second. Some of you guys have probably heard me say before that I usually determine my stop loss before I determine my take profit. And I just kind of want to reiterate the fact that I have narrowed down my stop loss. Okay. So don't forget that, you know, I haven't picked an exact stop loss yet, but we decided a range, right? It was going to either be somewhere between the 50 EMA or somewhere above the structure. So we're going to figure out that right now. And as long as we're getting a 1 to 2 risk to reward or better, that's the key. So what I'm going to do now is I'm just going to readjust this trend line and just kind of get an idea of exactly where this trend line kind of breaks through. And remember, at the end of the day, right, trend lines are not foolproof, right? So just because, you know, we know it loves to bounce off of trend lines like a T, right? I mean, like, look at that. Boom, boom, right? You have that trend line all the way. You can have this trend line extending for forever all the way to the right. And it just so happened that up here last week, we saw price test this trend line and bounce off, right? You can't make this stuff up. So anyways, let's get back into our trade. Now, looking at this trend line and readjusting this trend line, we can obviously see that where our original stop loss would be is below this trend line, which is okay. Really, for me, this trend line is irrelevant, but like my personal opinion, I don't think price is going to go back and test this trend line unless we see some very positive news for the pound come out. Really what I'm looking at is just kind of this structure right here and the 50 EMA. So as long as we're a conservative amount above the EMA and taking into consideration the pair that we're trading, which is pound yen. And what I mean by that, like a considerable amount on pound yen would probably be at least 50 pips. Right? For me. And so, you know, seeing this at 80 pips right here, I almost like the way that this trade is set up, even though like I didn't even adjust this. It just happens to actually work out with 80 pips. You could reduce the stop loss a little bit. So you see how our risk ratio right now is 3.25. You see this in the green text, the white text in the green box right there. The lower you make your stop loss, right, the higher your risk to reward is going to be, right? Because you're able to risk less to make more. You're risking the same amount technically, right? It's a 2% risk, but your target is higher. Your one-to-one risk to reward is a lot smaller, so you're able to achieve a lot higher risk to reward, if that makes sense. So, yeah, I like an 80 pip stop loss on this pair. It's well above our 50 EMA. So if market makers decided, hey, this is going to be our potential reversal area, but just to stop out traders, we're going to really spike it up before dropping. That's something that we could see happen. And so I think that 80 pips gives us enough breathing room. But obviously the biggest thing is you need to check your risk to reward, right? I would not set the stop loss at 80 pips if I was looking to target. Notice how, watch, let me adjust this a little bit. Watch if I take this to 40 pips. Say I try to make 40 pips. So you see how that's less than a 1 to risk reward? That's a half to risk reward. That means you're risking 80 pips to make 40 pips. Or if we're talking about percentage terms, you're risking 2% to make 1%. And that's not sustainable long term. If you risk more to make less, where I think that's a lot of traders' common mistakes, right, is where they let profits or they let losses run and they cut profits short. And that's essentially risking more than what you're taking in. Then you're this right here. If you take trades like this, you're going to fail long term. But you take trades like this long term, you're going to be very, very successful. And you take trades like this 3.25, and you aren't going to have to worry about, is this trade going to be a winner? Does this trade, is this trade going to be super, 100%, hitting a home run? You don't have to hit a home run every trade. You have to get that out of your mind. If you're under the impression that you need to win 80% of your trades, 90% of your trades, to even 70% of your trades to be profitable long term, hopefully this is sinking in to you guys that you can win 40% of your trades, 50% of your trades, and as long as each trade you enter consistently has a formula similar to this one where you're aiming to make more than what you're risking, you can be profitable. And that's double, right? You're aiming to make at least double what you're risking, minimum. That's the key right there, guys. That's the key to consistency. Okay. And I'll just say this, and then I'll stop. I'll get off the subject. But one of my good friends, who's been very, very skeptical to get into Forex investing for a while, he's seen me, make a name for myself through Forex over the past 3-4 years. He finally wanted to get involved. So about a month ago, he finally got connected to the trade copier and whatnot. And he got connected to our trade copier. If you guys remember, so before this CAD yen trade, we had a 2% loss on USD JAPI, and then we had a 2% loss on some other trade before that. The previous two trades before, before the 9% trade was losing trades. He had connected right before those two losing trades. So right when he connected his account, he lost two trades. He lost 2% on one trade, 2% on another trade. And then this third trade made 9% on. So not only did he make that 4% that he had lost back, but he went into profit, a little bit less than 5%, between 4 and 5% if you take into account, the account balance. So if you do that math, right, let that sink in, right? That's 3 trades, 2 of them lost, 1 of them won. That's a 66% losing rate, right? We won out of those, just an example, but 33% of his account has won trades. If he was to connect his account to a MyFX book right now, it's only going to show a 33% win rate. But he's net positive because we're controlling the risk, right? We're controlling the risk and only having the availability to make more gains. So that's what I like to tell clients, right? You're only going to have small losses, and you might have some small wins, but you're never going to have big losses, and you can only have big wins, right? So it's the beauty of having a formula. So let's move on to dollar yen. Let me just quickly plug in my laptop. Okay, there we go. Dollar yen is finding some movement to the upside. I think definitely there was a big trap in this area. Big trap to trap traders, right? We broke through this trend line. We kind of bounced off of it. I think a lot of people got perceived confirmation in this area that that maybe some downside was expected. But to be completely honest, the true reason why we have not traded dollar yen is because it is not going in, because, you know, as much as I want to sell it, like we're selling dollar yen, CAD yen, and I'm bearish on a lot of pairs that end with yen, I'm bullish on the dollar. So how can I sell dollar yen when I'm bullish on the dollar, right? And there's going to be, I went over this on one of the previous webinars. There's an exception to the rule. Sometimes you can take that risk, but a majority of the time you want to be looking to trade, you know, where everything correlates positively together. AUD USD past 24 hours kind of looks like Euro USD. I'm still biased to the downside, but not a whole lot of movement the past 24 hours. NZD USD. Let me just speak on AUD USD and NZD really quick. Let me just say that they have made quite the moves in the past 4 to 5 days. Both of them have just been drop, 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 drop all days, just descending, descending, descending. So I think, you know, maybe not a correction, maybe a correction, but some sort of buying pressure or fight from the buyers is we're probably going to see in this area. NZD USD definitely stay away from, because we're sitting on some daily support, right? And we've been waiting for this daily support to break for a while. Let me just show you guys. So we've got this big descent, pullback, and if we break through right here, we're probably going to see a stretch that's equal to this length. Okay, so we measure this. So it came down about 500 pips. We go from the top, okay, the top of the break of this correction, right? So, you know, that can be subjective, but I'd say it's somewhere around this area and 500 pips, okay? So you can go boom, you look where that is, 65. I don't know if you guys saw that, but it said 65.13, right? So maybe you want to make your target in even numbers, 65.13, right? What's the above or below that up to the next 50? What's the nearest, right? Well, closest to price that it would get to, it'd be 65.50. So we can put a ray here, go down here, tap right here, adjust this to 65.50, boom, lock it in, lock it. You know, if you want, maybe draw a little green box around it, lock that as well. And then boom, now you've got a potential idea, right? And it makes sense. You can cognitively write it down of why you would be placing this trade or why this makes sense. And that's all it is, guys. That's like seriously all it is you need some cognitive reasoning. You have to be able to read the markets, you know, have some common understanding of the markets, and just be patient. You know, let things come to you. Use good risk to reward, use good risk management. Just play it safe, you know, play it safe. Use good risk to reward, have cognitive reasoning, and you're good to go. That's really all it is. So USD CAD. Literally, I said on a webinar, guys, I said, call it. You know, you heard it first. I said, record this, screenshot this, do whatever you need to do. It's going to 134. That was my bias. Look where we are. That was when we were below 130. We were still in the 129s. We were over 400 pips away from 134. And we had an idea with cognitive reasoning and a bias to give us an edge in the market. That's the epitome of trading, guys. Okay? And being able to understand this, like being able to understand Elliott waves. Some of you guys might be saying, yeah, all this sounds great, David. You didn't get in this, but I don't know how to do that. I don't know how to do that, right? If you don't know how to do that, take the time to learn, right? If you don't know what this 1, 2, 3, 4, 5, if you don't know what an Elliott wave is, literally, I guarantee you, every single person watching this, if you don't know what an Elliott wave is, you go and you take the time. You go to YouTube University and you go and learn about Elliott waves. There's literally, I could probably go and pull thousands and thousands of hours on random videos, random websites, random forums here and there learning about Elliott wave. Now, granted, is every single resource you find going to be the most reputable resource? No, that's why you do your resource on where you're getting your research on where you're getting on your resources, right? First, before you even like delve into any information, you need to make sure the information you're learning is correct. You need to make sure the information you're learning is from people that have what you want. That's the key, is to get to where you want to be, you have to learn from people that have what you want. It's as simple as that. If you're listening to people that don't have what you want, then why are you listening to them? You're only going to end up getting what they have. And if what they have is not what you want, then it doesn't make any sense to follow that person. Does that make sense, guys? So, man, I'm going in today. Absolute fire dropped on this webinar. So, Let's wrap it off. CAD yen. CAD yen still biased to the downside. I'm glad we pulled profit when we did. I mean, I said that we were probably going to see a correction, and we did. Okay. Yeah, you CAD fire analysis, all about lessons. Great, guys. Yeah, good to see so many people learning on here. So I mean, that's pretty much it, right? We're waiting for a more further of a retracement, right? We needed to do something. I mean, guys, so I'm not calling all you guys out, but some of you guys, you got to use just common sense, right? We're looking at pound yen, right? We're looking at pound yen. We know pound yen, all the yens pretty much correlate positively or to each other. At least pound yen and CAD yen have a lot of positive correlations. And if pound yen, we're still waiting for that retracement before selling lower, right? Then what do you think we should do on CAD yen? We should probably wait for a retracement as well before selling lower. So boom, just keeping it simple, guys, keeping it simple. And then the beauty of Forex is when you're 5 years deep, 4 years deep, 5 years deep, you're creating an income off of Forex like I am. You don't have to spend every single hour looking at the markets. And that's the beauty, guys, of that. Some of you guys also ask me sometimes why I trade the pairs that I do on the right. It's because I know those pairs like the back of my hand. I can go 12 hours I can go 24 hours without looking at a pair and still tell you what the overall trend is. Literally, you give me a piece of paper and I can draw out what the structure looks like on the daily, on the weekly, and probably even like the daily up until, or the daily and 4 hour up until like the previous couple days. Because when you start, let's just say you start right here, guys. Let's say you pick CAD yen, that's the pair you want to analyze, and you pick right here, you start taking trading seriously. Well, as long as you're being consistent, you're at least taking a little bit of time every single day. All these moves, every single day that happens, you're following this and you're starting to understand how this pair works. And from there, you don't have to have as much like intensity on focusing on that pair, right? You start to understand, okay, this pair does this. It tends to move the most amount during these hours. During this session, it tends to move the most. That sort of thing, guys. And until you're doing this consistent enough where that's in your head, like you guys know, I literally spit the correlations left and right. I tell you what one pair is doing versus another pair. I don't have always all this stuff written down, right? My basics, my knowledge, when I was getting to this point, I wrote it down every single day. And there's a lot of things I still do write down. In fact, I'll just point this out and then I'll stop dragging it on. I'm sure you guys don't care all about this stuff, but there was something on my trading journal is on the other side of the house right now, but there was something on AUD. It was right here that I drew this down. I drew a little picture. I draw a little picture. I only drew it. These candles did, but I drew, the lines for what happened right here. And I had it on the weekly. I had everything else. And just what I recognized was how we had broken through the 50 EMA and we kind of consolidated around this. And then when we had this bearish engulfing candle after the fact that we saw this big move, it was actually on this day right here when we broke out. I wrote down that on AUD USD, when we tend to see a bear flag, in a descending trend, and we finally do get that bearish engulfing candle, we tend to see, bearish momentum. So now I know moving forward that, that generally happens. And I mean, I knew things like that before, but it's good to refresh your memory and have stuff like that. So if you guys aren't going through this process, you have to. Okay, you guys are asking for a couple charts real quick. I don't want to ignore you guys. Luke, you asked for GBP AUD. I'll tell you guys this because these are not pairs that I trade all the time. I'll give you my overall like long-term where I would expect price to be in like a couple weeks type of thing. Okay, based on what the markets are doing. Okay. Let me say this, Luke, that I don't actually want to look at any pound pairs right now because of the pound news coming out. And I really don't like looking at two pairs that are two big majors like that I'm not super familiar with the correlation to each other, the pound versus the Australian dollar. But I mean, I'll just say what popped in my head first thing, right? First thing that popped in my head is when I saw this on the weekly, and I'll just leave it at this because I don't really want to go too in depth on this, especially because I don't know a whole lot, is I noticed something like this over here, right? How when we finally got above the 50 EMA on the weekly, right, we found some nice support, and I see this structure that we have right here, right? And I recognize the 2 weeks ago, we have a little bit of an exhaustion candle, and then the last week, we have, it's definitely showing that the buying pressure is starting to kick in. So, I would be more biased towards, price coming back and testing the highs. Okay, so hopefully that helps you on pound AUD. And let's see, iPhone. Can I get analysis on EJ? Euro, Jappy. Yes, EJ. I do know EJ. This is why I know EJ. And I only know EJ because of Louis. So some of you guys know Louis. He's a co-founder of Positive Traders, runs his own Wizard Trading Group aside from Positive Traders. But we work very closely together. We're very, very good friends. We see each other multiple times a year, hang out all the time. Even though we live like 3,000 miles away from each other. He lives on the east side of Canada, and I live on the west coast of the United States. So we're on polar opposite sides of countries, but still managed to get it done. But and this is why I think I have a good understanding on EJ is, if I actually remember this trade, guys. Me and Louis were actually in Vegas at the time together, and we did this analysis. I remember at the beginning of a Sunday when we were in Vegas, we gave out this analysis right here, and it was before number 2 had happened. It was when price was like down here, something like that, something along the lines of that. So I understand price, but I am bearish on EJ. Simple as that. Okay, so I'm looking at selling. We're looking at selling pound yen. I'm looking at selling CAD yen. Kind of on the sidelines of dollar yen, but euro yen specifically biased to the downside. I'm biased to the downside on euro USD. I'm not going to get into all the details right this second, but eurozone is collapsing. Okay, Europe has done some very shady things in terms of agreements and money and just the whole financial sector. It's very similar. Just to give you a kind of a synopsis. You guys remember if in the U.S., most of you, I'm sure if you live in the U.S., you remember in 2007, 2008, there was the housing market crash. And if you guys have watched like The Big Short, you've done any research into why the housing market crashed. In layman's terms, there's a lot to it, but in nitty-gritty general idea was that people were getting approved for more loans than what they were supposed to be getting approved for. Okay, someone that was supposed to get approved for a $200,000 loan for a house. Mortgage loan for a house was getting approved for a $650,000 house for a loan, right? And obviously, you're only getting approved for a $200,000 if you can afford to pay for that $200,000 house. So people were getting approved for loans much higher than what they were supposed to, and then it caught up a lot. And then everybody found out, and that's when the housing market essentially collapsed. And a very similar situation is happening in Europe right now, or is that's what we have an idea of what is happening. It's not like public information. This is just my idea of what is happening over there. It's happening, but with the government, right? Essentially, the government is lying on how much money they are able to, or how much funding they should have, their budget, that type of thing. And they're getting loans a lot bigger than what they were supposed to. And what's the whole idea with a loan, guys, right? A loan is that you pay a loan back, right? So now they're getting to the point where they're defaulting on loans. And that was the whole thing with the housing situation, 2007, right? All these people got loans years and years and years prior to 2007, 2008, but then people weren't able to keep up with their payments. They default on their payments, okay? And then it was just a whole fiasco, right? People know that their house is going to get foreclosed, so they're renting out their house and they're pocketing the rent. Oh, whole mess. Some of you guys, unfortunately, may have even been tied into that situation. My parents personally were, unfortunately. So I was very well versed with the whole situation. So anyways, just getting back on track with euro yen, because I'm bearish on just Europe in general right now. I'd expect euro yen to fall lower, and the whole idea why I'm bearish on yen, it just makes sense. I don't even have to look at the charts, just fundamentals. I'm already biased to the downside, but I will just say this with the charts, right? Uptrend, we're in a downtrend right now, right? Higher low, higher high, higher low, higher high, right? Higher low, higher high, higher low support, whatever, higher high, right? And then we make boom, lower low, lower high, lower low, right? So we're in that stage. This might not even be the lower low. It might come down lower, and then that's our lower low, and then we come out, make our lower high, right? But technically, on the weekly, we're in a downtrend. Enough said. That's it, guys. So that's my bias, right? Pound yen. This is what I'd like to look at, right? Pound yen, limit order. So I'm going to be giving out a limit order next couple minutes here, guys. Check your Slacks. Okay, within the next 20 minutes here, you're going to get a notification inside of Slack for this limit order on pound yen. I'm going to look at it a little bit. I mean, I don't think that I need to change anything. 80 pips stop loss, entry right around the 50 EMA, 3 0.25 risk to reward. Really can't ask for anything better. So we'll just keep it at that. I like this exact same trade. So 146.90 stop loss, 146.10 entry, sell limit. Okay, obviously it has to be a limit order. We aren't anywhere near there yet. 50 pips. And then 143.50 is take profit. So that is that, guys. So we have one more live webinar next week on Friday. And we will wrap it up from there. So I appreciate you guys' time. Have a wonderful rest of your evening, morning, afternoon, depending on where you guys are. If you guys learned something out of this, like transfer that energy that you have right now, that excitement that you have, and just, throw a little message in chat in the chat, right? Let the good people of our chat room that have never watched one of these before know just how good these webinars are, how much education, how much value, and just real shit is dropped on this, right? Because watching these webinars every day will literally turn you guys into soldiers in the markets. So appreciate you guys' time. Have a great morning, afternoon, depending on where you guys are, and I'll see you guys tomorrow for our last webinar. Peace out, guys.